To December, right? Today is another big day. We did have some news come out at 8:30 this morning. That news was the CPI. We had core CPI month over month, CPI month over month, and CPI year over year. We did get a reaction. The market moved higher, and now it has since moved all the way down through the Globex low. So a big fake out this morning. And this is a big reason, and the reason I bring it up is because we always talk about impulse areas. This is something I picked up from Jim Dalton, paying attention to the impulse area of the move rather than paying attention to the news or the number itself tends to keep you on the right side of the market and tends to keep you more objective in your bias and tends to keep you on sides a lot more often. So what we'll do is we'll start here on the monthly, and then as we get to the profile, we'll talk a little bit more how that would have helped you trade this morning successfully. Starting on the monthly, you can see we are one time framing higher. We have a developing +4 here, and we're getting a breakout over a previous equilibrium. Now, if we look back, the next level up really besides that 4,700 is to me all the way up 4750, 4768. There's not really much above that. We're in kind of this breakout zone, and so this is going to be something that I'm going to be paying attention to is throughout the rest of this month, can we continue to hold this breakout? We're breaking out above this big 6 month balance that we've talked about, right? 1, 2, 3, 4, 5, 6 months here of balance. We're breaking out above that range and trading ranges back from 2022 in January. So a big time frame has now come into picture, right? You're talking about maybe people that have been shorting or have been selling stocks all the way back in 2022 in the beginning of the year. We're approaching 2024, and you're getting into those ranges. They're going to have to be making decisions. This can be our long-term traders slash investors slash hedge fund managers, banks, things like that. They're going to be making big decisions on what they're going to do if this monthly can kind of hold the rally into the end of the month. Something I do want to take note of, and one of the traders that I trust a lot on YouTube or Twitter, his name's Jim Carson. I'll post his Twitter in the chat here. So here's his Twitter. He is just a super smart guy, and he has been saying that he's expecting the market to continue to rally into the middle of January, into all-time highs, into the end of January. So, not that he's always right, but he definitely does have a very good grasp on the market, especially a longer time frame. He's been right a lot, so it's just something to pay attention to. He's in the boat that this is going to hold, and us and the way that we monitor things, we really don't like to fight the trend here, right? One thing we like to try to identify is kind of who's in control, and right now it's very convincing that longer time frame traders that are long in the market seem to be in control, right? We are building momentum, this +4 candle into the month of December. So it'll be interesting to see how it closes, but we do want to pay attention and understand that when you get a breakout of balance, the best thing that you can really do is go with that breakout, and the first thing you want to do is monitor for continuation. So don't try to fight the market thinking, okay, it's overdone, it has to come down, right? It doesn't necessarily have to come down. And then also on that, if it does come down one day, don't just assume that that was it and it's just going to keep coming down the rest of the days. Now, switching over to the weekly, you can see this because of the contract change, it is a little bit skewed here. This happened last time we had the contract change. This happens anytime we have a contract change where the market's kind of expecting a little bit of volatility. You can see we continue to one time frame up on the weekly. So you've got the long-term monthly one time framing higher. You've got the weekly one time framing higher. Then we switch over to the daily, and the weekly is also a breakout of balance. We switch over to the daily, and the daily also one time framing higher, and also kind of getting this breakout of balance look as well. So everything kind of pointing to more continuation to the upside. Now, like I said, that's not to say that this thing's just going to keep continuing up every single day, and no matter what you do, you can just close your eyes and buy. But it is letting you know that until we get some type of change, and typically we get this type of change starting on a daily chart, that we want to be very cautious getting short the market. And reason being, because trend is up, right? So if you are getting short the market intraday or temporarily, right, that's a little bit different story. But overall, the market has been making higher highs and making higher lows, and it's now breaking out of balance on all time frames. So any shorts, you want to be cautious. Now switching over here to the profile, and yesterday's settle was 46.78 half. Oh, I had a line there. Tends to be, especially yesterday, we had a +4 day. So this tends to be our spot where we would like to see the market stay above. The play setting up today is going to be a play number one. It looks like, I mean, it's going to be close, right? We're going to be approaching that value area high most likely first. So that's going to be kind of our ticket. This 66.50 for me, and then even down to like this 66 quarter, right? That's the level that we talked about yesterday. If we do get a pullback into that area, that's where I'm be looking for buyers to kind of step up. We do have, very little volume traded in that area. Got some single prints kind of floating around there from yesterday as well. So we can assume that there's some trapped shorts down here in this lower distribution. I'll be looking to kind of play off their covering and get back up here towards the settle. So another 10 points, basically the same play that we were looking for yesterday. Right, yesterday we looked for it a little bit lower, and it actually set it up for a lot higher. We had a 26-point range yesterday, so had you held your trade for most of the day, you would have captured close to 20 points. I think I got 11 per contract yesterday, so it was a pretty decent day, pretty easy day. Mostly just kind of traded up, a little bit of a pullback, and then one time frame higher into the rest of the day. That being said, we do have some mechanical levels that were left behind yesterday, sitting here at the 64, and then again here, this low, just the way that it formed down at 57 just really didn't seem like a very secure level. So may look to trade through that should we get a farther breakdown. We did finish on a spike yesterday once again, so spike rules are going to be in place. So you're kind of seeing this continuation of buying into the close and price exploration, kind of indicating that we're still getting this excess look. The market is still searching for a price that it can agree upon. Now, like I said, until we get a cessation of one time framing, which would be a break of this low down at 53, you do want to be very cautious with shorts. And I'm more talking long-term shorts. If you're looking for a nice scalp short or even just a trade short intraday, that's a different story. But any trade that you plan on holding overnight without a cessation of one time framing is going to be, you're just going to need to exercise a little bit of caution on that. Now, overnight inventory is pretty neutral, right? We've got, it's mostly, I guess I would say like probably 70-30, 60-40 long, with it being above the settle. And one thing that we do want to understand is that when we have a +4 day and we're below the settle, we do need to be extra cautious being long. Now, that being said, the real key here would be a breakdown into these single prints, close them, and then come back up into this upper distribution. And that's kind of where we'd be looking to take that long from, if they don't get that breakdown, right? You could try to get close still to that 68, but just be cautious because a breakdown from that 68 or break below that 68 most likely comes and cleans up this weak level from yesterday where we saw the momentum traders pretty much pile in after that first pullback held. And that will most likely bring a visit to the point of control, the VPOC, and the previous day's close, which was 60.50. So you need to be very cautious as we had that double distribution day yesterday, and acceptance really below this 68 most likely comes back down to that 60, and that will actually be a trade that I'll be looking for to set up throughout today. So there's kind of two trades that I'm looking for. I'm looking for buyers really to kind of hold this upper area here. You can give it a little bit of room, basically like 68 to 73, and just to get that continuation. And if they cannot hold that 68, and we start to see some closes below here, I think we do get a visit of that 60 level and cleanup of these mechanical references here. So definitely a day to exercise caution. That's the nice thing about the +4 -4 is it really lets us know is our play that we are looking for, play one or play two, because we only look for 2 plays a day, right? 1 trade per day. Day like today where we normally look for that trade back into value and to go with it can be tricky because of the momentum yesterday. And the reason we kind of assume that, right, is because we see the momentum traders kind of pile in. You get these 2 mechanical references, a little bit of sequencing starts to build, and then we have this distribution up here. And so we kind of assume that everyone that got long up here is kind of off sides. So if the market were to come down, stop them out, regain that 68, that would be the spot that you would look for. So you're not just necessarily buying the previous value. You want to see the buyers show up inside the previous day's value in order to take that trade higher. Now, if you are interested in learning more about the profile basics or the profile in general, make sure to send me an email at brad@thetradevets.com. Have a wonderful day. Make sure you're managing risk and sticking to your trade plan. I'll see you guys tomorrow.